Hello everyone, I'm the Butcher of Wall Street, Marcel. As you can see, we're going to discuss some new receipts and information regarding AMC stock today. This is also applicable to other heavily shorted equities such as GameStop, silver, gold, etc. But today specifically, we're going to be talking directly about AMC stock. It's good to see all you, ladies and gentlemen. Now, in case you're wondering, I am a retail investor with over 20 years experience trading on the stock market and close to a decade in crypto as well. I'm a former real estate broker. I own a freight brokerage business. I have started actually multiple freight brokerages that have reached eight-figure valuations. And now we're working on a stock and crypto brokerage for the purposes of pulling these orders out of dark pools. Look at this. Look at this fucking camera. Unreal. Can't even get 2 minutes into it. What a piece of garbage. There we go. We're back. I've had some questions about it in the past, actually, as if I actually was a real estate broker and such. Here's my former license from when I was a real estate broker for the state of Illinois. And I learned a lot doing it. I learned a lot about manipulation in the housing market. And in my time in freight brokerage here, which is over a decade now, I've learned a lot about manipulation in brokerage in general, whether it be real estate, freight, stock, and crypto brokerage. We're going to talk about it right now and dive deep. We've got all the receipts here. I'm going to get started with one of my favorite videos. Two of them, actually. They're very short. One's 5 minutes. The other one's about 60 seconds. So now's your chance to use the bathroom if you want. This is going to be probably about 45-minute stream. We'll see where this takes us, though.
I want to be clear. I do not respect the SEC.
We made the decision in the morning to limit the buying of about 13 securities on our platform. So we're really in unprecedented times. In order to protect the firm, we had to limit buying.
That markets are efficient because of active managers setting the prices of securities. Firms like Citadel, we're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued.
Sam Bankman-Fried and FTX, he's been charged by US courts and the SEC with money laundering, conspiracy to commit wire fraud, and securities fraud for the collapse of FTX. The former chairman of NASDAQ, Bernie Madoff, built the largest Ponzi scheme in history. Over 4 decades, he faked records of annual gains to investors who thought he was investing their funds, when in fact, he was just using new investor capital to pay off older investors.
But the synthetic shorting and naked shorting, which is illegal, market maker can execute naked shorts insofar as they're facilitating a trade. The regulators are looking at that now as to whether or not there was this naked shorting by the market makers on behalf of the hedge funds in order to facilitate the shorts. And I think they're going to uncover that there were some issues there. But the penalty for naked shorting is really not significant enough to stop it. Citadel and Goldman and all of the players get fined constantly for doing this.
Hedge funds and other Wall Street firms have teams of analysts working together to compile research and analyze shares of companies. Individual investors do not have those resources.
I basically would like to ask the SEC why they didn't act on the morning of January 28th, because I was so scared. I can't tell you how scared I was. I was so scared. I can't tell you how scared I was.
Well, Thomas, what were you scared about? What does failure look like? You said we came close to breaking. What were you scared of?
I was scared of a domino bankruptcy. I tell you, the rules require the long brokers to go into the market and buy the shares at whatever price. So that drove the shares up to $480, and then suddenly it didn't go further, but it could have gone further.
So buying and selling those 200 shares would make the market maker $1. But as millions of shares are traded, the profits from the spread add up. In 2020, these brokerages collected almost $2.6 billion in payments for stock and option orders.
These brokers, including Interactive Brokers and Robinhood, that generate revenue from selling the order flow to market makers.
Business has always been done like this on Wall Street for over 100 years.
our orders compete against each other to get the best prices. But if the order instead is routed to a wholesaler that has agreed to pay for it, the order is not going to an exchange and is not necessarily receiving the benefit of that broader competition.
As you mentioned about commission or zero commission does not mean it's free. It does have some cost inside. Some brokers have payment for order flow.
Disclosure alone, by enhancing the disclosure around payment for order flow, really will address it. United Kingdom, Canada, Australia, all have banned payment for order flow. I know we have different markets, different systems. We even have letters that we've gotten over the years, dating back over the last 20 years, articulating why it's not good for our system. So I really ask staff to consider that, but also to consider it only in the context of the entire market structure.
On January 28th, our daily deposit requirement was 10 times more than on January 25th. As a result, Robinhood Securities imposed temporary trading restrictions on certain securities. Robinhood Securities put the restrictions in place in an effort to meet increased regulatory deposit requirements.
The decision to restrict trading really was internal to Robinhood. We did not have discussions about that. Like GameStop, AMC, all these meme stocks have brought naked short selling really to the forefront of the market's interest. This is something that's going on for a very long time in the small cap market and is very much a problem.
Has your husband ever made a stock purchase or sale based on information you've received from you?
No, absolutely not. Okay, thank you. Thank you.
Those are fully collateralized tokens.
That markets are efficient because of active managers setting the prices of securities.
The order is not going to an exchange and is not necessarily receiving the benefit of that broader competition.
That's absolutely rich. Of course, it's not receiving the benefit of the broader competition, because when they buy your orders using payment for order flow, they process them through dark pools. They internalize them. They don't hit the lit market the way they're supposed to. It is the literal definition of price suppression. It is the way that guys like this can say that markets are efficient because of active managers setting the prices of securities, trying to drive the value of companies towards where we think they should be valued. Let's cook.
Passive investing is actually rooted in the theory that markets are efficient, and that markets are efficient because of active managers setting the prices of securities. Firms like Citadel. That markets are efficient because of active managers setting the prices of securities. Firms like Citadel, firms like Fidelity, firms like Viking Global, Capital Research. We're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued. Trying to drive the value of companies towards where we think they should be valued.
How many times does he have to say this for people to understand what's going on here? The literal fact of the matter is that Citadel Securities is constantly able to manipulate markets using payment for order flow and dark pools. And just like Ken Griffin just got done saying, Fidelity, Citadel, Virtue, all of these cats, regardless of which one you're using Schwab, Webull, etc., they're all engaged in the exact same forms of market manipulation. And the ones that make them the most amount of money. They make ridiculous amounts of cash off of buying your orders from your broker-dealer. Your broker-dealer is selling it to them instead of to the NYSE, instead of to the NASDAQ, instead of to IEX. Because the wholesalers can afford to pay more. Because they can then internalize it and hold on to your orders for up to nearly a month. They can also fail to deliver, which is oftentimes even more profitable. They can manipulate markets. They can short the price. Check this out. Rule 605 and 606 statements. This is what this beautiful little spreadsheet here is all about, guys. Now, the spreadsheet, I have actually taken all of the data here and put it in there for you guys, as well as the definitions from the appendix and everything else included. And I will go over all of this with you in detail just momentarily. And I promise you I'll make it not boring. And the fact of the matter is here, somebody in the community took the time to put this into, into a bar chart, to a bar graph, into a pie chart. And in case you can't see what that says that 0.3% of shares are routed by Citadel Securities, of AMC specifically, for the month of July. 0.3%. And in the month of August, there were 0 shares routed to lit markets. The majority of them, 99.7% of the 1.96 million shares in July, and 100% of the 4.86 million shares of AMC in the month of August, were executed and internalized by Citadel. That means they buy and sell shares when they choose. They buy your orders from your market makers, and then they can hold on to it for as long as they want. Look at the price improvement for the month of July versus August. It is obviously a negative price impact for the month of August versus July, as more shares were traded, more shares were internalized, and fewer shares were routed. Literally 0 shares routed externally to lit exchanges by Citadel for AMC stock. And here you can see, this is from Citadel Securities. It says, the SEC adopted Rule 11AC 1-5, now known as Rule 605 of Regulation NMS, to improve public disclosure of order execution practices. Under this Rule 605, market centers that trade national market system securities are required to make available the public monthly electronic reports that include uniform statistical measures of execution quality, guys. And that's what we've got here. You can see this is the SEC website with the definitions and the list of parties and the actual order and format of fields. The order and format of fields I took and I placed here at the top of this spreadsheet for everybody to be able to follow along. So as you can see here, there's a lot of them. There are 26 different fields, and all of these numbers and codes are indicative of this Appendix A from the Securities Exchange Commission, which is linked in the Excel spreadsheet you guys are looking at right there. Let me zoom in on this here larger in detail for you to see. So this spreadsheet, this bar chart, was actually created by Randall Cornett. And although I don't follow the guy on Twitter because I disagree with much of what he says, but I will say that I think he did a good job in putting this together. And so I will not, of course, attack the person. I will attack the data. And it sure seems to me as if the data is on point because I went and looked it up myself. And I literally went into the SEC website and I pulled up what you see right here. This is directly from the SEC and from Citadel's website. Now, I know this looks like just a big mumbo jumble of letters and numbers, and it is exactly that. So I will explain to you guys exactly what it means. But before I do, let me read some of what he wrote, and I'll interject with what I have to say here. This is actually crazy. Utilizing the Rule 605, where market makers have to disclose order execution, I found something interesting regarding AMC while digging through Citadel Securities execution reports. For the month of July, there was 17.227 million routed shares and 41.4 executed shares total. Million, of course. Huge difference. Normally, you'd expect these numbers to be more closely aligned, as routed shares generally lead to execution. Oddly enough, in this case, fewer shares are routed, while a larger amount is executed. This is massive internalization, which is a huge conflict of interest when it comes to price improvement. Issue number 2 is that the shares improved total was 31 million plus. This means the price improvement by letting them execute your orders, and he is correct on this. While most of us can agree price improvement is a good thing, but this figure seems unusually high compared to the total executed shares. 41 million orders executed with 31 million improved. Yeah, sure. There are 2 ways that you can look at this. If you look at it optimistically, you could say that Citadel's doing an excellent job at improving prices for customers. And if you look at it skeptically, the definition of price improvement might be lenient, or it could be masking the true execution quality, which is probably dog shit. Despite high executed shares, over 6 million shares executed on certain days, The price improvement percentages or amounts are sometimes very small, 0.0007%. This to me indicates that although a large volume of shares are being executed, the actual benefit to the customer in terms of price improvement was minimal, which could be concerning from a trade execution quality standpoint. There is just conflicts of interest all over the fucking place. And this was just for July. And here he has a chart of routed versus executed shares. The blue line, well, you can see there's nothing blue, right? It's this little minuscule thing here. Routed shares versus executed shares. They were executed and almost nothing was actually routed to the lit markets. In August, literally 0 shares were routed to the lit markets out of the 4.86 million shares that received price improvement. Look at the price improvement spread between July versus August. You can see it absolutely collapsing in the month of August as Citadel internalized over 150% more shares in the month of August than they did in the month of July. The stacked, routed, and executed shares for July versus August here as well, 0 shares routed, the rest executed and internalized by the wholesaler, Citadel Securities. July routed versus executed, you can see that tiny blue sliver right there. That's your slice of the pie, ladies and gentlemen. That's our slice of the pie right there. 0.3% versus 99.7% executed shares for Citadel Securities. So he goes on to say, all right, so I've been doing some digging into some Citadel data from August regarding AMC, and honestly, it's kind of even more sketchy than July. Basically, for all of August of this year, Citadel Securities handled millions of AMC shares, but guess what? They didn't route a single share to other exchanges. They didn't route a single share outside of Citadel. You read that right. They kept all the trades in-house. Internalization to the fucking max. Here's what that means. There were 0 shares routed outside of Citadel Securities. None. Nada. Zilch. Zero. Not a single share went to public exchanges where there could be more competition, better price execution, and actual proper price discovery. Everything was done internally. Citadel Securities handled all the trades themselves, which makes me wonder why are they really getting us the best price? Because that's how they justify payment for order flow payments. They claim to get us best execution. Price improvement, on some days, it was barely noticeable. On other days, it was actually negative. Like people were literally getting worse prices than they should have. This is what internalization does. This is what happens when your orders are not routed to lit markets, when they're traded in dark pools, when they're withheld from the markets, when the stock prices of stocks that you love are suppressed to make it as if your money spent in the stock market makes absolutely nearly 0 impact and makes it almost completely intangible and unverifiable as to the amount of price discovery that there should actually be. So why does this matter? Why shares don't get routed out to lit markets, to other exchanges? There's no competition for those trades, which could mess with prices and hurt retail traders, aka all of you. Citadel Securities basically gets to control everything, control the price of the stock, and rake in profits without letting the rest of the market in the action. He says, I'm not trying to start a conspiracy, but it's hard to ignore the fact that Citadel Securities is playing by their own rules. Hence why I keep telling people this very thing right here. Citadel Securities is basically acting as the buyer, the seller, and everything in between. They are the judge, the jury, and the executioner. And with 0 shares routed externally, it's like, why aren't retail investors supporting a broker-dealer that will route orders directly to lit markets instead not to the wholesaler Citadel? And in order to do just that, we've spent the last 37 months, literally the last 37 months, working on an upcoming brokerage firm called Lit Exchange. You can become an owner of the company via our private equity Regulation C Founders Investment Campaign and literally own equity in the company. And when we IPO, you will also receive shares, first buyer's rights, and a shitload of other benefits. Go to litexchange.com to check that out. But we have a lot more here than just that. When you look at the reality of these numbers here, when you look at all these data sets, you can see that the first field is the code identifying the participant. That is the designated participant. And that the letter T, that is for the NASDAQ. The next field in a file shall be the code identifying the market center as assigned by the designated market participants, and that is TCDRG, which is basically Citadel's market center. Okay, these are their dark pools. These are their internalizers. 3. The next field in a file shall be the 6-digit code identifying the date of the calendar. And as you can see here, it is 2024-2024-08. That stands for August of 2024. The next field shall be the symbol assigned to an individual security under the National Market System Plan, right? The NMS. That's AMC, as you can see there. The next field, let me see if I can scroll over sideways in this thing, is the code for one of the 5 types of orders by which they regulate. 11 is marketable limit orders. 12 is inside the quote limit orders. 13 is at the quote. 14 is near the quote. And 15, excuse me. Market orders are 11. Marketable limit are 12. Inside the quote limit are 13. At the quote limit are 14. Near the quote limit are 15. This is basically discussing exactly where these orders are taking place in the national best bid and offer, even though they're being internalized and they're not really hitting the national best bid and offer till after this has happened. So I'm not going to read every single one of these things. I'm going to break it down and give you guys the most important things. But all of it is here in this spreadsheet, which I've linked in the chat right to the side. I'm also going to put it down in the description and in the comments when this video is over. But you can find it right now in the live chat right on the side. So what we're seeing here, I'll turn the volume up a little bit for you, Glizzy. What you're seeing right here is the exact numbers with the numbers of shares that are executed by Citadel Securities. The number of shares which are internalized and how many are being traded within and outside of the markets. And when you take the time to add them up, as these were here, you can see that they are all being executed and internalized by Citadel Securities. So this should tell you right there that if you're buying AMC stock and you're not directing your order to a lit market, you should consider supporting a stock brokerage that will actually do this for you automatically. That is the purposes of lit exchange. There are some stock brokerage firms out there which you can manually route your orders. It is very time intensive, it is very consuming, and it is very complicated. You also have to get direct permission from them. You can see that with Fidelity. You have to either have the app installed and properly configured on your computer. You have to ask them for permission. They have to give you actual permission. You have to call customer service. You have to go into the app, into the settings, and enable direct routing. And then you have to know who to route it to. There's 72 dark pools in the United States, actually in the world, actually that trade on the New York Stock Exchange and such, that are used to facilitate trades, I should say, because they don't actually trade on the market directly. And there are many, many more out there around the world and that are used by private institutions. But this is not all. If you already left the video, you just missed out on the best information here, because we got the actual information directly from the Consolidated Audit Trail. The Securities Exchange Commission is giving us this information. And the failures to deliver, we're going to discuss that right now in conjunction with the Consolidated Audit Trail. The CAT system tracks orders through their life cycle and identifies the broker-dealers handling them. And this allows regulators to track activity in stocks like AMC and GameStop, etc. So here's what's up. The next audit trail, CAT system, Consolidated Audit Trail update, comes out October 17th. So in 10 days, we'll be right here looking at that data as well. As of right now, we have the data for August and September, the end of August and the beginning of September available to us. And here it is right here. This is for all of the options and equities in the market, on the New York Stock Exchange, in the NASDAQ, etc. And you can see here that these are options from August 9th through September 12th, and for equities from August 9th through September 12th. Equities being stocks, etc. Options being call contracts, put contracts, etc. you can see, let's say August 16th, there was 10.2 million overall errors on that one day date alone, just in one day. There are tens of millions and sometimes even hundreds of millions of errors on a single date. September 9th of 2024, there was 298,591,151 errors in stocks directly related to the trade data statistics from the CAT system. And these are errors, overall errors, that were counted in the reporting by the CAT system there. All of this here directly leads to market manipulation, withholding of data, marking shorts as long, rehypothecations, married calls and puts, tokenized securities, failures to deliver, the list goes on and on and on. I'm not going to drone on about it, right? And then options right here. Remember, options is indicative of 100 shares. So you have to multiply this number by 100. So on August 19th, for example, there was 2.4 million, and you have to multiply by that by 100. So that's 200,445,000 errors, shares worth of errors in options on that one date alone. And then even more crazy, like absolute astronomical numbers. Let's bust out the calculator just so I don't make some stupid decimal place error. There was 211,239,885 options errors in one day. Multiply that by 100. That's 21,123,988,500 shares worth of errors on September 11th, 2024 alone in the options market for our beautiful and completely fair and and efficient markets here, thanks to guys like Kenneth Cordell Bedpost Griffin. And in case you didn't know, his middle name is Bedpost because his wife alleges that when she told him that she wanted a divorce, that he threw a fucking bedpost at her and nearly took off her head.
Passive investing is actually rooted in the theory that markets are efficient, and that markets are efficient because of active managers setting the prices of securities. Firms like Citadel, that markets are efficient because of active managers setting the prices of securities. Firms like Citadel, firms like Fidelity, firms like Viking Global, Capital Research. We're all running large teams of people that are engaged in fundamental research, trying to drive the value of companies towards where we think they should be valued. Trying to drive the value of companies towards where we think they should be valued.
Does this tell you a little bit of something here, ladies and gentlemen? Let me see if I can get this cam scene to work here. I don't have a guest here, apparently, so I'm not going to use this one. But I will swing back over here, and I will put this simply. Folks, Ken Griffin and these firms have teams of people doing research, fundamental research, to drive the value of stocks to where they think they should be valued. I've got news for you, Ken Griffin. There are way more of us than there are of you. And when you combine all of our resources against that of Citadel and Virtue and all the other market makers and hedge funds and family offices, we still greatly outnumber your firms by 10 to 1. You have quants, we have quants. You have intelligent people, we have intelligent people. And thankfully, there are a lot of people out there that have been doing significant amounts of fundamental research and sharing that information, much like what we've shared with you here just moments ago today. So do me a favor. If you learned something and you found it somewhat entertaining and educational, drop a like, subscribe if you want to learn more, because this is the kind of shit that we go over every single day. Not only that, we don't just point out the issues. We are literally coming up with ways to solve them. We don't cry and bitch and moan. We come up with solutions, we buy, we hold, and we actually implement change in these financial markets. See that banner on the side, Lit Exchange? Go to litexchange.com, enter your email address, sign up. You can even own the fucking broker-dealer for yourself. And then, when we IPO one day in the near future, then you may have the potential opportunity to make a significant amount of money on your initial investment, to get in on the ground floor of an upcoming stock and crypto broker dealer that already has thousands of people signed up for it. and we haven't even launched yet. Why? Why would people sign up for a crypto and stock broker that hasn't even launched yet? Because of the massive, incredible opportunity that is there. Because we are actually going to make changes in the financial markets. And it's really simple, guys. We have a significant moat. For those of you that are unaware, a moat is a business term for a very specialized part of your business that prevents others from copying you. But something that's not a moat is routing orders to lit markets. But why don't all these other firms do it? Because they make more money routing their orders to Ken Bedpost Cordell Griffin over here than they do if they were to route your orders directly to IEX, NASDAQ, New York Stock Exchange, etc. Firms like Schwab, Webull, Fidelity, etc. don't give a shit about whether or not you get best execution. Robinhood, etc. There's a reason Robinhood was sued by a Securities Exchange Commission for $65 million and found that you retail investors, including myself, lost over $34.1 million more than if we would have just paid a commission in the first place. And that's accounting for the fact that you didn't have to pay for a commission because, of course, you did pay. You just don't realize it because the costs are hidden in the bid-ask spread. When you sell, you get a worse price. When you buy, you get a worse price. It's better off to pay a few pennies up front and see what those pennies or dollars are, whether you're making a small order or a large order, and know exactly how much you spent on the trade, know exactly that you got the best execution possible. These are real, tangible solutions that you guys need to be aware of. If you guys have any questions, drop them in the chat right now. Let's go over to Q&A. Bacon says, I can stay regarded longer than they can stay solvent. Hot Writable says, wow, that's crazy. And how is this MF allowed to say that? Andrew Bryant, this MF is allowed to say that because what he's saying is legal. They can legally manipulate markets. Guess what? They are a market-making broker-dealer. And this is exactly what we intend to fight against as a stock and crypto broker-dealer for retail investors such as yourselves. Because we don't have to send our orders to Citadel and Virtue. We can send them to the NYSE. We can send them to the NASDAQ. We can send them to the IEX, etc. We can put them on lit markets, route the orders. Instead, these guys are doing the exact opposite. They routed 0 shares in August. If this doesn't piss you off, I don't think you understand what the fuck's happening. Or you just don't care. And if you don't care, why the fuck are you even invested in the stock market in the first place? Why? It makes no sense. It makes absolutely 0 sense. And here, yes, they have all these errors on the CAT system. Look at the failures to deliver on AMC. On September 4th, there was 137,000. On September 11th, there was 43,171 fails to deliver on AMC stock specifically. On September 11th, in the options market, there was 211 million options worth of errors. That's 21,123,000 shares worth of errors in one day alone on this stock market, ladies and gentlemen. If this doesn't piss you off, you probably shouldn't be trading in the stock market at all. But again, there are options. There are things we can do. That is why I am here. Not only to explain to you guys what's going on, but to give you guys literal things we can do to create change for ourselves, for our children, and our great-great-grandchildren, things that will last the legacy. S.U. Ray asks, any deadline on when to get in? Thanks, boss. Well, there's about 9 more months left on the actual Regulation C crowdfunding campaign, or until we reach the maximum allotted amount, or until we pull it after a public filing and then decide to close it and say, okay, that's enough. We are going to proceed. So if you can, get in as soon as you can. This has been filed with the Securities Exchange Commission under the SEC Edgar website. You can see here our notice of exempt offering of securities for Regulation D, DA, and C offering statements and filings here on the on the SEC Edgar website for Lit Exchange. You can click them here to see them as well. You will be able to find those directly on our website as well. S.U. Ray, I appreciate you asking. litexchange.com or litexchange.app, whichever one you want to go to. We own multiple domains. The best thing about it is going to be, in my opinion, aside from the direct routing, aside from Hey, sweetie, you all right down there? Okay. I had to check on my baby girl. She was coughing. Aside from the lit market trading, the preventing of market manipulation, stopping the front running by hedge funds and high frequency traders, the actual artificial intelligence that we are going to be using here is going to allow people a level of swarm intelligence that's never been seen before. And I know that for a fact because I've used dozens and dozens of these brokers over the last 20 years when I've been trading. I'm not even going to name them because you're going to just get bored of listening to me, but I've literally used dozens of them myself. And the actual user interface itself is probably going to blow your mind once we get to the point where we deem it ready for public use, achieve all the regulatory requirements and launch it, which is going to be in the near future. We just have to get to that point first. And that is the whole point of the Founders Program. You can become a founding member by investing in the Founders Program. You will own equity in Lit Exchange, which means you will be an actual owner in the company. And then when we IPO, you will receive shares. You also have first buyer's rights to buy more shares upon our IPO. You will get a bunch of other benefits. We are listed on the FINRA approved funding portal, Silicon Prairie. You can view our SEC filings at the SEC website. There are thousands of users already joined on our wait list, ready to bring their assets under our management. You can see more details right there. Information about myself and my partner, Mehul Patel. Each one of us has created from the ground up and bootstrapped multiple eight-figure companies, eight-figure plus companies over our 20 years each in markets as business owners, as entrepreneurs. We put out a press release in late September there, detailing how we raised over $200,000 within 24 hours of launching the crowdfunding campaign. And this gives you guys the opportunity to actually own the company. You can see it on the FINRA approved funding portal right there. Will Lit Exchange be subscription based in any way or a small fee per trade? There will be subscriptions and there will be commission based trades, because then that way you will be able to see exactly what you pay. Some of them will be literal pennies. Some of them will be, if you have a big trade, it might be a couple dollars, a few dollars maximum, but you will know exactly what you are paying for. Whereas you make those trades now, when you make those trades now, you can see that Robinhood paid a $65 million fine to settle charges of misleading their customers. And this is something that has been happening over and over and over again. Because they failed to seek to obtain the best reasonably available terms when executing your orders. This causes customers to lose tens of millions of dollars, said Joseph Sansone, the chief of the SEC Enforcement Division's Market Abuse Unit. They literally found out that the order finds that Robinhood provided inferior trade prices that in aggregate deprived customers of $34.1 million, even after taking into account the savings from not paying a commission. Nothing in life is free. You are the fucking product. Don't you see that? And you're paying more in hidden fees via commission-free trades. As Gary Gensler said, there's nothing free about commission-free trades. There is a cost hidden inside there. Hence the beauty of the Consolidated Audit Trail. Ace Boogie says, Fidelity asks where you want your orders routed, so that means they're not actually doing it, huh, boss? No, Ace Boogie. What Fidelity doesn't actually ask you, Fidelity forces you to jump through hoops, and you have to know exactly what to do, how to do it, when to do it, why to do it, and what to select. And if you choose one that's not a lit market, then it goes to whatever dark pool you've accidentally selected or whatever dark pool they want. Fidelity is their own clearinghouse, so they clear their own trades and they can route their own orders to wherever they feel like doing so. Daniel Delaney says, and think about it, once Citadel owns BlackRock. Oh, I want to read what you said, bro. Hang on one second while I scoot over there. Daniel says, and think about it, once Citadel and BlackRock open their own market, they'll completely own the market and become unstoppable. Exactly. They're trying to open up their own market right here in my new backyard of Texas, because they know that if Citadel and BlackRock create their own stock exchange to basically be the antithesis of the New York Stock Exchange. They'll be the judge, jury, and executioner, and there will be no Securities Exchange Commission to breathe down their necks. There will be no FINRA to breathe down their necks. They're going to make the rules and change them at will, and things are going to be much, much worse than they are now. This is literally part of why we have to work so hard to get our own brokerage firm off the ground. They will literally own everything, says Daniel. You're absolutely right. When all this comes to fruition, Mr. Tally Man, tally me banana. That's right, Glizzy. Ace Boogie says, I can't wait. Cheers, my friend. Neither can I. This has been 37 months in the making. Matt says, when will regulators do something about this criminal activity proven by the CAT system? Man, it's there. It's there. And I don't know when they're actually going to do something about it. The good thing is, guys like Andrew Left of Citron Research have been locked up and are facing 370 years in prison thanks to the Consolidated Audit Trail. So it's actually already working. But when it comes to big firms, the SEC doesn't want to go after them. Why won't the SEC go after these big firms? Because the big firms are the one that's going to pay them when they leave the Securities Exchange Commission. They're making $150,000, $200,000 right now working for the SEC. When these guys go over to these hedge funds and family offices, they get paid millions of dollars per year with massive sign-on bonuses. Have you ever seen the show Billions? Have you ever seen the show Billions? If not, you need to watch the show Billions. It is incredible. It is an amazing show. And it directly relates to everything that we're talking about. There's a saying in that show in which they ask is, how sure are you about this, when they're talking about insider trading and other things like that? And the response, the number one response there is always, I am not uncertain. Think about that. I am not uncertain. That is pretty clever. But yeah, these firms literally show themselves going to the SEC lawyers and saying, hey, you're doing a great job. We want you to work for us. Forget about that $200,000 a year you're getting for the SEC. We'll pay you $2 million a year with a $6 million sign-on bonus. Come on over. It's hard to say no to a 10 X increase in your pay, to 1,000% increase in your yearly salary, not to mention a bonus that's bigger than the amount of money that you'd make over the next 30 years alone. That's a big part of the problem. And that's why the Securities Exchange Commission is not done a better job of going after these big players. SU Ray says, the regulators and government are not here to help. My great-granddad knew that. That's right. Ricardo Rea, I always route to IEX. Cheers, my man. Good for you. Little Buddha says, when the government says they are here to help, run. Look at what's going on in North Carolina, sadly. FEMA says they're here to help, and they're confiscating your freaking trades. Trades. They're confiscating all of the freaking goods, and they're putting it in warehouses. Bacon wants a link to the Discord. Yes, my friend, I'll give you a link to the Discord. I'll drop it in the chat right now. Why not? Here you go, ladies and gentlemen. This is a 7-day link to the Discord, but get in now because I will likely change it in the next 24 hours. I'm going to drop it right now. The Discord is free. I don't charge you money. I don't ask you for anything. So it's in the chat right now. You can join. There's no cost. I will never go in there asking you for anything. Period. If you want to invest in Lit Exchange, you can go to the FINRA approved funding portal and find it right here. They're called Silicon Prairie. You can look them up if you want. They're a fully licensed broker dealer that is FINRA approved to hold these sorts of, this isn't a GoFundMe, okay? We don't do GoFundMes in finance, okay? This is a FINRA approved funding portal. And on there you can find our pitch deck, our business plan, our audited financials, our offering memorandum, form subscription agreement, etc., and all of the other information directly related to Lit Exchange, our highlights, and the offering details as well. You can see here the light offering, there's Moonwalker, you get a ton of benefits, and they are cumulative. So if you invest twice, then you could receive the higher level offering, and so on. As you can see, we've got multiple deep fucking value investors already at the $25,000 mark. Cheer to you, my friends, Nicholas, and you other guys. I know you know who you are. I want to say thank you again to all of you investors, large and small, from whether you're Moonwalkers, Silverbacks, Apex Legends, Juggernauts, Interstellars, Gamma Squeezers, DFV investors. I appreciate all of you. And you guys can see more information about that directly on there. And you can see our press release even here has information directly related to payment for order flow and dark pools. I'll drop that in the chat in case you want to see it. But this is the Rule 605 statements. And that is exactly what Citadel is doing. They are telling you directly on these statements that are public information, but they are very, very poorly manufactured. Look at this data. This data is in a text message all in one field. It won't even paste across all of the different Excel columns and rows, because they do that on purpose to make it hard for you to see what's going on, and they can easily obfuscate the data. So 0.3% of shares were routed externally. 99.7% of shares were internalized by Citadel in July, and 100% of their 4.86 million shares in August were routed, or excuse me, internalized, and 0 fucking shares were routed externally. Whopper says, shout out to Randall for this news. This should not be news to us. We all know it's bullshit, and thank you, boss, for making a video about this. Absolutely agree. Absolutely agree. Thank you very much. Manifest Moon says billions of people will open, billions of dollars will open their eyes. And Al Capone, just like Kenny, gave Illinois governor candidate Richard Irvine $30 million for his campaign because he set up Citadel Towers in Aurora, Illinois. Crime pays in the market. He's absolutely right. In case you guys don't know about this, Citadel invested $30 million in the Democrat governor candidate Richard Irvine for the city of Aurora, Illinois, in order to set up a high-frequency trading tower, in order to be able to pass information extremely quickly and front-run your fucking trades. This is the kind of shit that these guys are constantly doing. And this is the kind of shit that you guys can look forward to if we don't do something about it. Do me a favor. Go to litexchange.com. Do yourself a favor and look into it. Do a little bit of research on it. It won't take long. And I think you're going to end up doing a deep dive and saying, this looks amazing. Best part is, it protects you from stock market manipulation. It keeps orders out of the hands of Citadel and Virtue. Cheers, my friends. I want to say thank you very much for being here with me. I wish you all peace and wealth. Cheers, motherfuckers. I'm not fucking leaving. We're going to be filthy fucking rich. Thank you again, everybody, for your questions. I appreciate all of you guys. Look for the links in the description and in the chat.